There's a lot of big developments happening in the UK and Europe this week, a lot of friction, a lot of cross currents, and that's generating a lot of trading activity and big moves in the euro, the pound, as well as the FTSE and the DAX. Right across between stocks and currencies, a lot going on. So let's start right off the top. The euro is starting to pick up today. It's gained a lot of new interest, and there's a couple of reasons for that. First of all, the yield, of course, the ECB has been running its quantitative easing asset purchase program for quite some time now. They have announced that they do plan on doing a one and done tapering from 80 billion a month to 60 billion in April. However, signs are starting to appear that they may come under pressure to do more. The reason for that is inflation starting to take off. Eurozone inflation spiked up to 1.8%. That's nearing their target. Spanish inflation took off to 3% over a year. We saw a strong employment report out of Germany, although they had weak retail sales, and a generally inline report out of France on GDP. But the point is that the European inflation is starting to pick up. The reason for all this huge amount of stimulus is starting to go away. However, the ECB's conundrum right now is that they wanted to keep the stimulus going through all of these elections. There's a whole pile of elections coming up in Europe this year, in France and Germany in particular. In France, the party that wants to leave the Eurozone is leading right now, and in Italy, there's a possibility of elections as well, and they're the parties that want to leave the Euro also are leading. So there's a lot of potential for friction and disruption within Europe itself this year. So that's starting to put a lot of pressures on the counter pressures on the ECB and on the euro. They're quickly finding themselves stuck between a rock and a hard place. On top of that, the third force has now come in today, and that's the Trump administration. Some of the Donald Trump's people have been out this morning accusing Germany of using the euro to devalue its currency, and also saying that basically their trade pact that they've been working on for years is dead in the water. Now, the thing is this, right? In a sense, everybody knows that Germany has been using the euro to weaken its own currency. If Germany walked away from the euro today and brought back the Deutschmark, its currency would explode to the upside. That's one of the reasons why for all these years it's been bending over backwards to keep Greece in, to keep Italy in, to keep Spain in, to keep Portugal in the eurozone, because it keeps the Germany's value of Germany's currency down and depressed, and enables it to defeat everybody in exports. That's not a surprise to anybody. The surprise is that for the most part, people have been thinking of it as a within Europe kind of thing. The Americans are out saying today no, they also see it as being an outside Europe thing today. So yes, German Prime Minister Merkel was out today saying that the German government doesn't control the euro. That's true, but that's also a smokescreen, because the reality is just having Germany within the euro depresses its currency, and that's the big thing there. So what are we seeing today? Euro dollar is actually taking off, primarily on the inflation, and possibly also in reaction to some of the comments coming out of the United States, but it is breaking out today. It's been in an uptrend for about a month and a half now, climbing up out of this triple quadruple bottom here, base in the 103.60 to 104 area. Today we're decisively driving up through 107.20, even clearing this 107.60. Next resistance about 108, and then there's this Fibonacci cluster in here between 108.30 and 108.50 that could provide the next resistance challenge. Meanwhile, RSI, look at this, head and shoulders base in the RSI showed a significant change in momentum underway, and we're seeing the RSI just steadily working forward, upward momentum building. Certainly, if we do see the euro continue to work higher, you could see less talk of a devalued currency, but I think even just the way the euro is structured is still a possible source of tension. Meanwhile, in the UK this week, we've got the UK government is tabling the Brexit legislation today, and the white paper is due on Thursday. On top of that, there's a Bank of England meeting due on Thursday. The central bank's not expected to do anything, but they might talk about the economy. Certainly, the economy has done a lot better than Mark Carney thought it was going to do after the Brexit when he took the Remain side. So we'll see if he continues to backpedal or what. Anyways, with the pound this week, it had a big rally already last week, so this week we're seeing it kind of do more backing and filling and digesting for the euro pound here. We're seeing for the pound, sorry. But at the same time, it remains well supported. Look, there was this massive double bottom around 120. This 50-day average around 124 and a quarter is holding as support. First resistance about the 125 round number. The biggies, this 126.85, which is a 23% retracement of this huge, massive post-Brexit sell-off. Meanwhile, we're seeing here that we've got a positive trend in the RSI of higher lows. RSI is back above 50. It's all pointing towards growing upward momentum for the pound. In the short term, though, it does look as though the euro is climbing faster than the pound against the US dollar. Because of that, we're seeing that euro pound is starting to pick up. Overall, we're in a fairly wide, broad trading range between about 83 and about 91, and here at 87 is about the middle of that, and we're kind of lately been swinging around the middle in this range of Fibonacci levels here. There's 82.60, 84.60, 88.60, and the next thing that would measure up would be about 88.60, or about even with this January high here. Plus there's a Fibonacci level at 89 even. However, RSI here has crossed back above the 50 line, so we do have an upswing underway. First resistance 86.50, then as I noted 88, 88.60 here is the potential upside for this upswing. We'll see what happens. There's so many different cross currents and pressures going on this week that this relationship could change at any time as we move through the week. Now, the one thing is higher currencies is starting to impact the stocks in American indices in Europe as well. Particularly, I'm looking at the DAX and the FTSE, the Germany 30 and the UK 100. So, first of all, looking at the German market here, we had the same massive post-U.S. election rally that we saw in the United States. Look at this. So we did have a growing negative divergence. Overbought RSI tells us it was getting tired, and an upward momentum was starting to fade. And look at this. We got this little shooting star candle here. Told us that the bull was a sign of exhaustion, a sign of a buying climax here. Big up candle, shooting star, and now down candle. And the only thing we didn't have is this would be a perfect evening star if these three declines were all in one day. But still, it's enough to show that we're seeing a definite shift has happened. The bulls were in control. The bulls peaked up here just short of 11,900, and now since then we've seen the bears increasingly gaining dominance. We're back here around 11,630. Next potential support here is around these all lows in here around 11,550. There's the 11,500 round number, and 11,450 is another point of potential support. But it does look like this index is rolling over. The last one I'll look at here, the UK 100, also starting to drift lower. This big, massive rally in the FTSE had been driven by the crash of the pound. So as the pound starts to recover, not a surprise, UK stocks start to come back down. And so we're seeing it drifting lower. Overall, though, not bad support here in this 7,100 to 7,200 range. However, if this does give way, the 50-day moving average could be tested around 70.35, or there's 70.20 Fibonacci level, 7,000. Round number 69.80, another Fibonacci level. So there's a whole big cluster of potential technical supports here that could be tested if the pound continues to rally and UK stocks continue to retreat. So between all the news coming out of Europe, all the that's already out, news that's coming out, potential talk about trade, and we never know what we might hear from the United States. So there's really a lot going on that can move European markets this week. On top of all this, we've got manufacturing PMI coming out on Wednesday, and as I noted, more news coming out of the UK on Thursday.